What should you do when everyone else is afraid? John Templeton, The Courage to Invest When the World is Afraid. Part 1. Opening. History remembers Sir John Templeton as one of the greatest investors the world has ever known. But his greatest achievement was not simply earning extraordinary returns. It was mastering something far more difficult. He learned how to remain calm when nearly everyone else was afraid. Most investors search for certainty. Templeton searched for opportunity. Most investors wanted to buy when headlines were optimistic. Templeton preferred looking where fear had driven everyone else away. That way of thinking was not natural. It was not comfortable. It required extraordinary patience, discipline, and emotional control. Because nothing feels more uncomfortable than buying while everyone else is selling. Yet throughout history, some of the greatest fortunes have been built during moments of widespread pessimism. John Templeton understood something timeless. Markets rise and fall. Economies expand and contract. Optimism and fear come and go. But human nature changes very little. Those who understand human nature gain an advantage that lasts a lifetime. This is the story of a man who refused to let emotions dictate his decisions. A man who looked beyond today's headlines and focused instead on tomorrow's possibilities. His lessons remain just as powerful today as they were decades ago. Because fear still exists, greed still exists, and opportunity continues hiding where few people are willing to look. Chapter 1. A Childhood of Curiosity. John Templeton was born in 1912 in a small town in Tennessee. Long before he became a legendary investor, he developed a habit that would shape his entire life. He was curious. He constantly asked questions. Why do people behave the way they do? Why do markets rise? Why do they fall? Why do crowds make the same mistakes generation after generation? He believed learning never truly ends. Books became lifelong companions. Ideas became lifelong investments. Templeton did not separate education from success. To him, they were inseparable. Every book read, every conversation, every mistake added another layer to his understanding of the world. This relentless curiosity would later become one of his greatest competitive advantages. Because markets reward those who continue learning long after others believe they already know enough. Chapter 2. Opportunity during crisis. One event forever changed John Templeton's understanding of investing. The world was entering one of its darkest economic periods. Businesses were collapsing. Confidence had disappeared. Fear dominated every newspaper. Most investors wanted nothing to do with stocks. Templeton saw something different. He asked himself a question that few others were willing to ask. What if the crowd is wrong? Rather than running away from the market, he began looking for companies that had survived despite overwhelming fear. He understood that many businesses were selling for prices that reflected panic rather than reality. This insight would become one of the defining principles of his career. The greatest bargains rarely appear when everyone feels optimistic. They appear when uncertainty reaches its highest point. Templeton never suggested buying simply because prices had fallen. He looked for businesses that remained fundamentally sound despite temporary pessimism. That distinction made all the difference. He wasn't buying fear. He was buying value hidden beneath fear. Chapter 3. Human nature never changes. Technology changes. Industries evolve. Economies transform. But one thing remains remarkably constant. Human emotion. People become greedy during booms. People become fearful during crashes. The headlines change. The emotions remain the same. Templeton recognized this pattern long before behavioral finance became widely discussed. He understood that markets often exaggerate both optimism and pessimism. When investors become excessively optimistic, prices can rise far beyond reasonable value. When fear dominates, prices can fall well below intrinsic worth. His goal was never to follow emotion. His goal was to understand it. Because understanding emotion allows investors to make rational decisions while others react emotionally. That may be one of the greatest advantages any investor can possess. Not predicting the future, but remaining calm while others lose perspective. Chapter 4. thinking beyond borders. At a time when many investors focused only on their home country, John Templeton looked across the entire world. Opportunity, he believed, has no passport. Great businesses can emerge anywhere. Economic growth can appear where few people are paying attention. By thinking globally, Templeton expanded the number of opportunities available to him. He refused to limit himself to one market or one economy. Instead, he asked a simple question: where is value today? Sometimes the answer was America, sometimes Europe, sometimes Asia. His loyalty was never to geography. It was to intelligent investing. This global perspective would eventually influence generations of investors who realized that wisdom and opportunity can be found almost anywhere. Templeton's greatest lesson may be this: the world is always changing. Those willing to keep learning, stay humble, and remain patient will continue finding opportunities long after others stop looking. John Templeton, The Courage to Invest When the World is Afraid. Part 2. Chapter 5. The Most Dangerous Emotion. There is one emotion that has quietly destroyed more fortunes than almost anything else. Fear. Not the healthy kind that protects us from genuine danger, but the emotional fear that appears when markets fall, headlines become frightening, and uncertainty seems endless. John Templeton understood that fear has a powerful effect on human judgment. When prices fall sharply, our minds begin imagining even worse outcomes. We convince ourselves that this time is different, that recovery will never come, that selling now somehow feels safer than waiting. History tells a different story. Every major market decline has felt permanent while it was happening. Every bear market has created headlines predicting years of hardship. Yet history also shows that economies adapt. Businesses innovate. Markets recover. Templeton never ignored risk. Instead, he refused to let fear make decisions for him. He believed that emotional reactions often create the very opportunities patient investors have been waiting for. The challenge was never predicting the exact bottom. The challenge was having the courage to think clearly while others were overwhelmed by emotion. Chapter 6. The Discipline to be Different. Independent thinking sounds admirable. Living is much harder. Imagine standing in a crowded room where everyone agrees the future looks terrible. Every news report supports that opinion. Every conversation reinforces it. Every headline confirms it. Would you have the courage to disagree? John Templeton did, not because he enjoyed being different, but because he understood an important truth. If everyone already believes the same thing, that belief is often reflected in market prices. When fear becomes universal, sellers become exhausted. Eventually, there are fewer people left willing to sell. That is often when opportunity quietly begins to appear. Templeton never invested simply to oppose the crowd. He invested when careful research suggested the crowd had become too emotional. Being different for the sake of being different is foolish. Being different because facts support a different conclusion is wisdom. That distinction defined his entire career. Chapter 7. Humility Creates Better Decisions. John Templeton possessed something surprisingly rare among successful investors: humility. He never believed he could predict the future perfectly. He understood that uncertainty is part of investing. Instead of pretending to know exactly what would happen, he prepared for multiple possibilities. Humility keeps investors curious. It encourages questions instead of assumptions. It welcomes new information instead of defending old opinions. Templeton believed that arrogance blinds investors. Once someone becomes convinced they cannot be wrong, they stop learning. Markets have a way of correcting that mistake, often painfully. The greatest investors remain students throughout their lives. No matter how much experience they gain, they continue reading, they continue listening, they continue adapting. Templeton's humility allowed him to keep improving decade after decade. He knew that wisdom begins with admitting there's always more to learn. Chapter 8. Investing is an exercise in patience. Modern markets move faster than ever. News spreads instantly. Prices change every second. Opinions flood social media every minute. Yet, one principle has never changed. Successful investing still rewards patience. Templeton understood that businesses do not become more valuable overnight. Neither does wealth. The greatest investments often spend years quietly growing before attracting widespread attention. Many people quit too early. They become discouraged because success takes longer than expected. Templeton viewed time differently. He saw patience as an ally. Every year, a well-managed business continued, increased the value of ownership. Compounding is not dramatic. It is steady. It works quietly beneath the surface. One day the results seem almost unbelievable, but they were built through years of consistent progress. The patient investor allows time to perform the work that emotion constantly interrupts. Chapter 9. The World Rewards Optimists. Although John Templeton was famous for investing during periods of fear, he was not a pessimist. Quite the opposite. He believed deeply in human progress. He believed people solve problems. Inventors create new technologies. Entrepreneurs build better businesses. Scientists discover new medicines. Engineers improve the world. Economies recover because people continue creating value. This long-term optimism gave Templeton extraordinary confidence during difficult times. Temporary setbacks never erased his belief in humanity's ability to move forward. He understood that pessimism often dominates today's headlines. Progress quietly shapes tomorrow's future. Investors who remember this distinction are less likely to become discouraged during temporary crises. History has repeatedly shown that innovation continues. Businesses adapt, communities rebuild, and patient investors who maintain perspective often benefit from that remarkable resilience. Templeton's optimism was not blind hope. It was confidence grounded in history. Again and again, humanity has overcome challenges that once seemed impossible. He believed the future deserved respect, but never fear. John Templeton, The Courage to Invest When the World is Afraid. Part 3. Chapter 10. The Four Most Dangerous Words. Throughout history, markets have experienced wars, recessions, financial crises, and periods of extraordinary optimism. Every generation believes its situation is unique. And during nearly every crisis, one phrase appears again and again. This time is different. John Templeton understood how dangerous those words could become. Of course, every period has its own circumstances. Technology changes. Governments change. Industries change. But human nature remains remarkably consistent. Fear still causes people to sell too late. Greed still causes people to buy too late. Excitement still pushes prices beyond reason. Panic still drives prices below value. Templeton never ignored changing conditions. He simply refused to believe that human psychology had suddenly disappeared. History became one of his greatest teachers. Not because history repeats itself exactly, but because people often repeat the same emotional mistakes. The investor who studies history gains something incredibly valuable: perspective. And perspective allows wisdom to overcome emotion. Chapter 11. Searching where others refuse to look. Most investors naturally gather in the same places: popular companies, popular industries, popular ideas. John Templeton asked a different question. Where is everyone refusing to look? Sometimes opportunity exists precisely because people have stopped paying attention. Entire industries become unpopular. Countries experience temporary economic hardship. Excellent businesses are ignored simply because they no longer attract headlines. Templeton wasn't searching for broken companies. He was searching for misunderstood value. There is an important difference. A broken business may never recover. A misunderstood business may simply be waiting for the world to notice its true worth. That distinction required patience, research, independent judgment, and the willingness to stand apart from the crowd. Great opportunities often feel uncomfortable precisely because few people recognize them at first. Chapter 12. Diversification is wisdom, not weakness. John Templeton believed strongly in diversification. He knew that no investor could predict every outcome. The future always contains surprises, unexpected events, political changes, technological breakthroughs, economic recessions, natural disasters. No amount of intelligence eliminates uncertainty. Diversification is an admission of that reality. Some investors mistakenly believe diversification shows a lack of confidence. Templeton saw it differently. He believed diversification demonstrated humility. It acknowledged that even careful research cannot remove every risk. Owning different companies, different industries, and even different countries created resilience. When one investment struggled, another often succeeded. Over time, this balance allowed wealth to grow while reducing the impact of inevitable mistakes. Templeton never sought perfection. He sought durability. And durable investing often survives because it accepts uncertainty rather than denying it. Chapter 13. The Real Meaning of Success. Ask 10 people how they define success, and you'll likely receive 10 different answers. More money, a larger house, a higher position, greater recognition. John Templeton viewed success through a much broader lens. Financial wealth was valuable, but wisdom, integrity, kindness, and lifelong learning mattered just as much. He believed that investing should improve your life, not consume it. Money is a useful tool. It creates choices. It provides security. It allows generosity. But it was never meant to become life's only purpose. Templeton often encouraged people to continue growing in every area of life. Spiritually, intellectually, personally. Financial success without personal growth, he believed, was incomplete. The greatest investment anyone can make is ultimately in becoming a wiser human being, because wisdom improves every decision that follows. Chapter 14. A Lifetime of Learning. One remarkable quality separated John Templeton from many successful people. He never stopped being a student. Even after decades of extraordinary achievement, he continued reading, questioning, exploring, listening. Many people stop learning after reaching success. Templeton became even more curious. He understood that the world continually changes. Every generation introduces new challenges, new technologies, new opportunities. The investor who believes they already know enough slowly falls behind. The investor who remains curious continues growing. Learning compounds just like investing. Every book, every conversation, every thoughtful question adds another layer of understanding. Templeton knew that curiosity was not merely a habit. It was an investment whose returns could last a lifetime. And perhaps that is his greatest lesson. Markets will always change, but the person who keeps learning will always be better prepared to understand those changes. Because knowledge, like compounding, grows quietly. One lesson at a time, 1 year at a time, one lifetime at a time. John Templeton. The Courage to Invest When the World is Afraid. Part 4. Chapter 15. Buying When It Feels Impossible. There are moments in history when buying a stock feels almost irrational. The headlines are discouraging. The economy appears uncertain. Friends insist the market will continue falling. Every emotion encourages waiting just a little longer. John Templeton understood that these moments often contain the greatest opportunities. Not because every falling market is a bargain, but because fear frequently pushes prices below reasonable value. He believed that true investing rarely feels comfortable. If everyone agrees an investment is wonderful, much of the opportunity may already be reflected in the price. Real opportunity often appears before confidence returns. That requires courage, not reckless courage, disciplined courage. The courage to rely on thoughtful research instead of popular opinion. Templeton knew that waiting for complete certainty usually means arriving after much of the opportunity has already passed. Chapter 16. Headlines are temporary. Every day, the world produces new headlines. Political uncertainty, economic concerns, corporate scandals, unexpected crises. The news cycle never stops. Templeton learned to separate temporary events from permanent change. He asked questions few investors pause to consider. Will this matter in 5 years? Will this permanently change the company's ability to serve customers? Or is today's fear simply creating tomorrow's opportunity? Most headlines disappear surprisingly quickly. Businesses continue operating. People continue working. Innovation continues moving forward. The investor who reacts emotionally to every headline often finds themselves constantly buying and selling. Templeton preferred a calmer approach. He acknowledged uncertainty without allowing it to dominate every decision. Perspective became one of his greatest strengths. Chapter 17. Wealth favors the patient observer. Many people believe successful investors are constantly making decisions. Buying, selling, trading, watching every market movement. Templeton's career tells a different story. His greatest decisions were often preceded by long periods of observation. He watched markets carefully. He studied businesses. He waited for prices that offered both value and a reasonable margin of safety. Patience was never inactivity. It was preparation. Just as an experienced hunter waits quietly rather than chasing every movement through the forest, Templeton conserved both his capital and his attention until the odds shifted in his favor. He understood that opportunities appear in cycles. Missing one opportunity is never the end. Another will come. That belief freed him from the fear of missing out. Instead of chasing markets, he allowed markets to come to him. Chapter 18. Character outlasts markets. Stock prices rise and fall. Fortunes are made and lost. Economic cycles repeat. Yet one thing remains more valuable than any investment portfolio: character. John Templeton believed integrity was an investor's greatest long-term asset. Honesty, humility, patience, curiosity, discipline. These qualities influence every financial decision. More importantly, they influence every life decision. An investor with strong character is less likely to panic during fear, less likely to become arrogant during success, less likely to abandon principles for short-term excitement. Templeton understood that investing was never simply about making money. It was about becoming the kind of person capable of managing success wisely. Because wealth without wisdom is fragile. Character provides the foundation upon which lasting success is built. Chapter 19. The courage to believe in tomorrow. Perhaps this is John Templeton's greatest lesson. History has never been free from problems. Wars have come and gone. Markets have crashed. Economies have struggled. Entire industries have disappeared. Yet humanity has continued moving forward. New businesses emerged. New discoveries transformed lives. New generations built upon the achievements of those before them. Templeton never ignored difficulty. He simply refused to believe that difficulty represented the end of the story. His optimism was grounded in history. Again and again, people adapted, recovered, created, improved. The future belongs not to those who predict every crisis, but to those who prepare wisely while maintaining confidence in humanity's ability to progress. That quiet confidence allowed Templeton to see possibilities where others saw only obstacles. And perhaps that is the greatest investment lesson of all. The future will always contain uncertainty, but it will also contain opportunity for those patient enough, disciplined enough, and courageous enough to keep looking. John Templeton, The Courage to Invest When the World is Afraid. Part 5, Chapter 20. The greatest opportunity is perspective. Every investor sees the same market, the same prices, the same headlines, the same economic reports. Yet some see only danger. Others see possibility. What creates the difference? Perspective. John Templeton believed that successful investing begins with seeing the world more clearly than the crowd. When fear dominates the headlines, perspective reminds us that history has endured many difficult seasons before. When excitement pushes prices to unreasonable heights, perspective reminds us that no trend lasts forever. Perspective allows an investor to step back, to breathe, to think, to ask better questions. Instead of reacting emotionally to today's news, Templeton encouraged investors to ask, What will this situation look like 10 years from now? That single question changes everything. Temporary problems become easier to understand. Short-term volatility becomes less frightening, and patience becomes far more natural. Perspective is not about ignoring reality. It is about refusing to let one difficult moment define the entire future. Chapter 21. The Quiet Power of Gratitude. One quality rarely discussed in investing is gratitude. Yet John Templeton believed it played an important role in a meaningful life. Gratitude changes how we view success. Instead of constantly chasing more, we begin appreciating what we already have. A grateful investor is less likely to make reckless decisions out of greed, less likely to compare every gain with someone else's larger gain, less likely to feel that success is never enough. Gratitude creates contentment. Contentment encourages patience, and patience often leads to wiser decisions. Templeton understood that financial wealth alone cannot satisfy a restless mind. True prosperity includes peace of mind, a clear conscience, strong relationships, a spirit of generosity. Money is only one measure of success. A meaningful life is measured by much more. Chapter 22. The Legacy of Sir John Templeton. Decades have passed since John Templeton transformed the investing world. Markets have changed dramatically. Technology has revolutionized finance. Information now travels across the globe in seconds. Yet his principles remain remarkably relevant. Human nature still swings between fear and greed. Crowds still chase yesterday's winners. Headlines still influence emotions. Opportunities still appear where few people are willing to look. Templeton's legacy is not simply that he built extraordinary wealth. His legacy is that he taught investors how to think independently, how to remain calm, how to stay humble, how to keep learning, and perhaps most importantly, how to maintain hope even when the world appears uncertain. Those lessons extend far beyond investing. They become principles for life itself. Final reflection. John Templeton often stood where few others were willing to stand, not because he wanted to be different, but because careful observation repeatedly showed him that the greatest opportunities often appear during moments of greatest doubt. His courage was never loud. It was thoughtful, patient, disciplined. While others searched for certainty, Templeton searched for value. While others focused on today's fear, he quietly prepared for tomorrow's possibilities. Perhaps that is the lesson we need most today. There will always be another crisis, another recession, another frightening headline, another moment when giving up feels easier than believing in the future. Yet history reminds us that progress continues. People continue building, inventing, creating, improving. The future has always belonged to those who prepare for it with wisdom instead of fear. As you continue your own investing journey, remember that success is not measured by predicting every market movement. It is measured by developing the patience to wait, the discipline to study, the humility to keep learning, and the courage to act when careful thinking tells you that opportunity is hiding behind uncertainty. Because in the end, the greatest investment is not simply the one you make in a market. It is the one you make in yourself. A wiser mind, a calmer spirit, and a lifetime committed to learning. Those are investments whose returns can never be taken away.